Hello and welcome to the trade setup. In this video we are looking at HIMS and Hertz health. It is time for another update and we have broken once again our area of support. Now this isn't necessarily a big surprise. I already mentioned in the previous video we were looking very likely for a break of these levels. We were tracking for continuation higher within our orange interpretation as well, and perhaps if the lawsuit news didn't come up, we might have seen more of an attempt to actually reverse from this area of support. We did have, in fact, some additional structural support in this zone, but clearly this is not the case. We are retesting this area of support from below, so we are basically testing it as resistance before we very likely extend into even lower prices. So what is next for this chart? We have broken yet another area. So I am not looking for continuation higher in a wave C within this structure. I would not be looking for continuation higher even within a wave 3 in yellow, even though technically we could still track an area of support for such an interpretation. It goes all the way down to the $9.8 level. Even within the interpretation of a potential series of 1-2 setups would be the same area of support. A very unlikely scenario, I believe. And what I think is best is to come to terms with reality that this chart could have a full count to the upside, that we could be looking even for new all-time lows. So in that case, I would adjust this area of support and remove this old one to track more of a signal that this structure is going to see a more direct breakdown. And to be clear, this is not a trade setup. I could be looking theoretically for a wave 1 up and a wave 2 down within this area, but this is in no way reliable to look for positions within. The risk is very high at the moment, and it's not a zone we should really trust for continuation to higher prices. We haven't really been trusting this chart ever since we broke the $30 level. Remember, we had this area where we had an initial 5-wave pattern to the upside that had a potential ABC structure. This was the only zone that was promising on this chart. The rest of the pattern is a hot mess, and that's why we had our signal at the $30 line. We knew that below that level of support, the likelihood of this structure managing to extend to even higher prices was extremely diminished, and that we should be prepared for a more direct descent into a larger correction. We didn't necessarily choose a specific correction we were going to track in case of a failure, but we knew the chart was going to be highly unreliable for continuation to higher prices. This has been made clear in every single video we have been tracking on this chart, and now we are nearly 50% down from the level we had as our line for continuation to higher prices. Yeah, we did attempt to hold it, but it did not succeed, and this should not be a surprising result. Now I believe it is time to get into the smaller time frame, and before we move there, I would like to quickly mention our channel newsletter. It is completely free. Anyone can join. The link for signups is in the description. Additionally, we have our channel membership that is now open for anyone who wants to directly support the channel. You get a couple of cool perks if you join, and you can find the link for that in the description as well, or you can click the join button, and there is also a video there and on the homepage detailing everything you should expect from the membership and the newsletter. Now, in this structure, we have been tracking an ABC pattern to unfold. I would still track this idea, and don't be fooled by the fact that this is a wave 1 up that we are considering possible here. I could very well look at a complete pattern in this ABC. Yeah, don't get fooled by that. Even though we are tracking an area of support, there is a strong risk that this will fail. We don't have a high probability structure that would suggest we should expect continuation to higher prices. We have this area of support. We are tracking an ABC pattern, but be prepared even for more bearish interpretations. This is just an idea of how we could look for a reversal, where a break below the $5.5 level would be a strong signal. Yeah, the 78.6% retracement, the last level of support, would be a strong signal that this structure is going to fail and head into new all-time lows. Now, regardless of count, we are looking for a potential 5-wave pattern that would develop in this area. I am open to having my mind changed about the structure, about whether we even get 5 waves down, but I would need to see some evidence first. Right now, we should be in capital preservation mode. Now, previously we were tracking this internal wave 3 to the downside, where we were still considering this to be a potential impulse that would have formed in something like a 1, 2, third, fourth, and fifth. I have to say, based on the current extensions, I find it much more likely that we would instead be tracking a diagonal pattern within this area in something like an A, B, C movement to the downside. So it doesn't really change what we have been tracking, because in this now current wave C, we were looking for a fifth wave to form internally in a 1, 2, third, fourth, and fifth. This is exactly what we will continue to track. Yeah, no changes there really. It's just that the overall structure we are tracking in this potential 5-wave move to the downside is going to be a diagonal pattern. And this actually has a couple of implications. So firstly, this would not be a wave 3. Meaning that once we have this wave complete, it would have to be a wave C. We would have an A, B, C pattern complete. Although this is assuming we actually form the fourth and the fifth in this structure. Otherwise, I would probably need to look for a slightly different interpretation, but honestly, it's not really a big change now. So, internally, in this pattern, we were looking in an internal wave 3 in this area, and within this wave 3 we were tracking an A, B, C pattern. We were also tracking an ending diagonal within this wave C to the downside, or this supposed fifth wave. And within it, we were looking for a wave C to develop to even lower prices. In this wave C we had a wave 1 down, a wave 2 up, and we were tracking a potential third wave bottom in place. We had our wave 4 correction, and we only needed another low to complete this pattern from this area of resistance. Currently, based on the latest extension to the downside, I would have to believe that we actually got an extension of the wave 3. I believe this is the most likely interpretation, and I will continue to track this expectation until we actually get evidence that this is really not the case, and that would be by breaking the area of resistance we would track for a follow-up wave 4. So, what has really changed within this count? So, instead of having an A, B, C pattern in a wave 3, I'm tracking an A, B, C pattern, the same structure, within a wave A instead. I'm looking at this shallow push to the upside as a potential wave B, and a wave C that would take us to even lower prices. I have to say, I cannot even rule out the possibility of the wave A still having ended here and then a wave C, where I would still need to look for even further continuation to lower prices in something like a 1, 2, third, fourth, and a fifth. But in this case, I would have expected probably an even stronger movement within the internal wave 3. Yeah, we didn't actually even reach the ideal target, the 138.2% extension of the wave 1, but I wouldn't rule that out either. In the end, I will be focusing on a main area of resistance. If we don't get to it and we extend in a more direct fashion, don't be surprised, it is entirely possible. And I wouldn't look into an exact count until we have a more substantial bottom in place to get some additional clarity. But right now, I'm watching the levels of resistance between the $19 all the way up to the $24 level. Here's the thing though, if we break the 61.8% retracement, we could be looking to go into the larger correction. This would not be our larger wave 4, we would actually still expect another fifth within this area. Even once this wave to the downside is complete, we would expect a fourth and a fifth. But at this point, even this wave C that we are tracking in this very, very small time frame might get another low. I could be looking for a potential 1, 2, third, fourth, and a fifth. If we don't get it, I wouldn't see this as a deal breaker for the scenario we are tracking. I would allow such distortion, but mainly I would be considering a potential impulse to form within this area. So I would be watching the resistance levels between the $17.7 all the way up to the $19.5, in which case we have pushed perfectly into the 50% retracement, and we have started at least an internal correction that could allow us to look for a different pattern. But I have to say, if we find a direct low in this area in a potential wave 5, I will be preferring this blue interpretation of an extension for this wave C in orange, and I would still be looking for a wave 4 and a fifth before I would consider the internal wave 3 actually complete. Now, we might actually benefit from even adding a count for this interpretation, but yeah, I see a lot more downside on the roadmap for this chart. Unless we get some break of the levels of resistance, I wouldn't be looking for any substantial low to be in place. And at this point, I might as well even remove this area of resistance for a potential wave 4. I believe we are very, very far currently from even looking for such price points to be reached. So once again, we are still looking for this wave 3 to extend lower. In fact, I believe this internal wave C would expect additional continuation to lower prices. I will add this to a different degree so it becomes more clear. But yeah, internally, I believe even within this blue structure, we could see very easily an additional low. Once we extend to lower prices in this blue structure, I would need to adjust this area of resistance for a follow-up wave 4. And really only above the $24 level are we really looking currently for something potentially more bullish. But for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.